Good morning, guys. Welcome back to my YouTube channel. And today is on Thursday, 20th March. And today, guys, this is the second last day of this month because tomorrow's Friday and then Monday is first, will be 1st April. So now it's around 34 minutes past 8. And welcome back to my YouTube channel. I just went long, at exactly 8:30. Age 30. You can see most of the cells have been taken out. These cells have been taken out. This one, equal loss, have been taken out. And is it that one that have been taken out? No, no, no. This one have been not taken out. I think we are about here. And guys, this a formation that they are just formed here. You can see this formation. There's a swing high here. Market coming over it with this week. That's a shift market structure. There's an efficiency that is here. This one. And this one is an order block. This black candle is an order block. It's a bullish order block. This one is a BC, buy side imbalance, sell side efficiency. So I'm expecting the market to go and get these equal highs that are here. This buy side liquidity, this one. Or let me just put it here. I don't know about sure bet. So guys, that this one. That one will be a sure bet. And you have come to refill this efficiency. I wanted to see the reaction after 8:30. That's why I waited until zone of 7:45. I waited until 8:30. I wanted to see his reaction because 8:30 is when the news come home. Today there's no news, but market always it can behave in a other way before 8:30 sometimes. That's why the zone that I didn't wanted to risk. I did after 8:30 exactly with this candle. I just went long from that point. Expecting the market to come take this equal heights that are here, better liquidity. Hence, on Tuesday, we had some good sell-off. Market consolidated. And today, this one is today. Yesterday, we consolidated a lot of time. We consolidated like the whole of yesterday, just within this range from here and here. First, didn't move any far. Today, we just moved from this place up, down, and here. This is 15 minutes time frame. This one was a good sell-off for today during London session. It killed the Asian session, all of the Asian session. Again, this one was taken out. This one was taken out again. So we formed a new law for the week, because you can see how market trend down today. We had a good sell-off for today, taking the forming a new law of the week. So therefore, I think we are targeting to take this high, this equal height that are here. That's our objective to for today. And I think I'll take something from the market here. I think that those would be 2 contracts or 3 contracts. I'll take some 2 contracts there, and take some 3 contracts here. And then let the market roll up. But this one will be half, 2 plus 3, 5 out of the 10 contracts, remaining the 5 that will come to be filled up there. So I'm expecting, if the market takes this one, I'll roll my stop loss to the positive position, letting the market to finish. If it come back, I'll still be in a profitable position. And please consider subscribing, like, share, and comment, guys. Then it's British pound. Yeah, this one is the 22 model. Sales have been taken. Most several sales have been taken when this market was moving down. And then swing highs were formed here. Market coming to take over swing highs as a shift market structure. This one is these are inefficiencies that are here. Market coming to fill even the 50% of the efficiency. That one will give you a direct price of market of the efficiency. That's a setup where you get, and that's your entry point here. You could have gone long from here, putting your stop loss just below the order block. This this consecutive black candle that form an order block, coming, taking your partials as you move by, and targeting the side by side liquidity as your target or take profit level. So I'm expecting the market now. It's just about 70 minutes to 9. So and if you look, like most of my videos, it's like I'm using the same type of a model. They always say stick to one model, you grasp it well, and then you can get another model. But you have to have a PDR race over that model. Like you have to understand also what's an order block, what's a breaker, what's a mitigation block, because those things are give you an insight where market's heading towards to. Like market can be heading towards to a breaker, or it can just be a user swing to attach the up close kind of the breaker, and then it starts reversing, and you are not aware. You're expecting the market to take that set of better liquidity. So if you are aware of that, so such PDR race or mitigation block, an order block, you are able to like to use your stop loss below the order block, even the below the mid of an order block. Those are your technical analysis behind risk management and trade plan. You have to have such PD arrays in your mind. It's not just about having a setup, it's about understanding what the market is doing, reading the price action of market. So it's always good to keep in touch every moment. Every day you check on charts, see whatever market's doing, try to backtest, journal it, make a mistake, accept the mistake, don't beat yourself because of the mistake. Get get up again, start start even doing it again like you never did a mistake. Don't beat yourself every match, every time that you have lost, you have lost. That one is going to trigger your mind to have that negative trend of losing every time. You have to avoid losing cycle. Losing cycles where you just get yourself, you have never withdrawn something from the account, you just depositing to the broker. You deposit every single time you deposit. When you get yourself that you have never ever withdrawn even a shilling or even a $1, even a dollar you have never withdrawn from your account, yet you always deposit every moment, then you just accept yourself that you are in a losing cycle where you have to come away from it. So start with mental, learn, accept yourself that you are not okay with trading, start technical studying about a good model, drop that model that you're losing because the model is not making you to earn. That's a losing model. Get where you're making wrong mistake every moment, kick again and start following your steps, do back testing. Just don't get into the trade. Just watch the market as you analyze the market, expect the market to rally towards this direction, and then you sit delivering the way you expect. That's how you learn when it comes to trading. You back test. But most of the time, it's always good to learn in hard way. shift market structure, bullish order block, market coming to reprice the deficiency, the B is informed here, your stop loss below the order block. Today's setup is this is like a 22 model. The side have been taken. We had a good price sell side delivery during London session, and today now it's around 8:40, 8:45. So there's a setup that have been formed here. That's a 22 model setup, and the share shift market structure here after this price come past to it, an order block. This black candle is an order block, an efficiency in the form of BC. So it's a BC, buy side balance, sell side inefficiency, market coming to reprice it. That's an entry. That's an entry point. You could have gone long here. I went long here. After this kind of formed here, and then I went long. Put your stop loss below the order block, the bullish order block. That's a black candle, that black candle. And then your targets this equal highs that are here. And then for me, I like taking partials. I'll take 20% here, 30% here, and then the 5% that will remain. These are 10, 3, 5. So that's 1, 2, 3. That will be a total of 5, and then remaining the half of it, I'll take it from here. That's today for today. It's a 22 model setup, and it's always formed every time. You can see the price delivered, sell delivery was good during the session. So I expect the market to come to reprice this buy side liquidity that are resting above here. The side have been taken. We get a good price sell side delivery during London session. You can see I want to take the first partial to be taken. You already taken first partial here. You're remaining with 8 contracts. These are 8 contracts. We'll take the 3 here. We remain with the 5. So just with the time, just within before 8:30, I know you are going to take this one. These equal highs are going to be taken just now. So you can see how price delivers so well, guys. And by that, I'll just try my stop loss just below here. Nice, 9 exactly. You can see it here. Time zone. Nice 9. I know before 9:30, we're going to take this one. I know you're going to just take this second. You can see there are 8 contracts. You're going to take these 3 now. 8 remaining with 5. That's the result from there to this point. We're going to take this one before 8. That's just 9 exact. You can check here. It's 9 exactly. I'm using euro dollar, his market. So that's my expectation that you're going to take this one. I remain with these 5 contracts finished towards that better liquidity that's resting above there. And we are just coming to take this one at the moment. Yes, the target. I just wanted this one to be taken out. You can see this black candle. I just want to place my stop loss just below there. That will be a good stop loss placement. Stop loss placement. I don't think tomorrow I'll be able to trade because it's the last day of the week of the month, and that's the same of the week. So it's always I don't like trading such days, and even next week will be an FP week. I'll trade only on Monday and Tuesday. Maybe New York session of Wednesday, part of Wednesday. Friday and Thursday, I don't normally trade during an FP week because the market not always doesn't follow your setup or the rules that you used to trade. It's always shake and manipulate you during an FP week. So next week, I'll see if I'll get to the market again, but after next week, that's a sure bet that will continue to get up. So I know you're heading here now. I want just to see market coming, taking this one. Market crosses this order, this candle below. I'll take my stop loss just above here. Because here we have a breaker. This one came here, and this one is the one pushed this market to come take this short-term high in this one. this low, and which came below. So this one is a breaker. This one. So market can come back towards that breaker. So I'll place my stop loss below here. So that even if it comes to the breaker, it doesn't take my stop loss. And if it's come through and pass through and take this sell liquidity, I'm always in a positive position. So that's how I'm expecting the market. Yeah, I'm expecting that I'm going. That's what I'm expecting going to do now. I'll be more happier if you just remain like that. Just close that efficiency there. The next candle is going to open and then rally up. Because I know you have unfinished business of which taking this side, the side liquid that are here. This candle next that's opening, that one. I'm more happy if it's just roll up. Touch the high of this candle. They have that candle is 19, 1.08090. And the low I meant is 090. Just three handles remaining. In blockade if truly above now. Now that's enough for the former weekend just go up. Yeah. If it go past this level, it's okay for me to close. To rally my stop loss above here. Just remaining seven handles to take this top. This my next partial. Because that is 81, 87, and the high of this candle was 81, 80. Okay, for this candle start moving up. Now I think the reason of I know the reason that that's why market's coming. The reason behind why market's coming down. So it would be okay for me just to place my stop loss there. I think we are coming for this breaker if it's coming down. That's if the market's coming down. When you check in 1 minute, the market's coming for that breaker. Yeah. If you're capable of taking seconds, you can get a setup that is here. There's a setup that's here, showing the market is coming down. But see, the market just come to touch this high. The high of this week is 8180, and the closing price of this candle is 8180 exactly, and then it reversed back. So want to see if it's coming up or you still have have unfinished business of this one though. Unfinished business. But they always say if you get a setup that's in low time frame, that's good, that market's going is going somewhere to reprice, not a Judah swing, just a good move of market with a setup within a specific time frame, the time that you always trade it, like if it's a M session during 9 or 8 or 10 to 11 or during 3 to 4, like alarm session, silver bullet setup, and it gives you, even if the long run the market is going bullish and it's a sell side delivery, you can just get in, let the market deliver the place where it's going to, and then get out of the market. That's how you become a successful trader. This one's an unfinished business. There's some sesa liquidity that is here. So that's the target of today. Maybe. I don't know. So, you can see the market didn't even touch that sesa liquidity. Because I know there are people who placed their target profit here, expect the market to rally down, and then they went short. As in they went short from maybe here or here or at any point, depending on your model, and then they placed their stop loss just here. That's why the market came back to take those stop loss away. And for me, when I saw that there's a setup that's going up, that's the reason that's the reason why I go to the market. So that even is going up, I'll go with it. This is a good price delivery, and you can get some good amount of money from here. You count your dollars, you put them in your account, you call it a day, and you close your week so in a profitable position. So I think guys, it's going to take time. It's like 8 minutes. 8 minutes to opening bell, of which is 9:30. And then you'll have some opening range from 9:30 to 10, then the price will start moving. I think if the target is this one, so it's going to until 10 so that you can run towards this buy side. But if you have made the target already, because you don't know the market, you're just trying to predict. You don't know the market, but you always try to read the price. Why is the market behaving in certain way? That's the reason. That's what you always do. Predicting the price by predicting what's the reason market doing this? Why is the market consolidating? What's the market moving to buy side delivery? What's the market moving to sell side delivery? But you cannot predict the exact movement of the market. That's why there's no person who doesn't make a loss. Even if you're an expert on trading, you have to make a loss. I do make losses as well. I do make more losses. I do make more losses. And there's no shame for making a loss at all, at all. I do make losses. Let me just show you. You can see this one is a loss. There's no shame in making a loss. As long as you are good to go. So even if you make losses, just know you are learning. I accept, embrace the endurance of that, endure that loss and embrace it to learn from it. So that next time when such thing happen at that time, you're aware what to do next. Because for me, I don't go with the trend, like markets going this one. Like this one, I was not sure about this move. I wasn't sure about it at all. Because there's no stuff formed that has been formed near good, and you can tell you have been consolidating. The other things, the end of the month, then the last week of this month. So I was like, it might consolidate with my entry. I within my entry, and it could not even have, it could not be, it would be difficult to move or come towards my stop loss. So I don't risk, and my percentages, my percentage, or my mentor is telling me that the risk of losing is higher than the risk of getting profit. I saw it, and then I was like, I'm not getting that market. Traded today, just went long here. The market to come back. Take this one. You have took some fast slots here, remaining 30% here. First slot was how many? 3,000. First slot, 3,000 here. We take the second here, and then we'll end up here. Let's wait and see, guys. You can check the opening of this candle, this down close candle. After this one opening it. This one is an opening, or it's an opening here. That is 80.53, and the low of this candle is the present candle that we are in, 80.53. The same, it's within the same range. So I want to see the reaction of it. That's the reason why I came to realize that press the lever in a perfect way. There's nothing like buying and selling pressure. This an algorithm is coded to do so. That's why I always look to. There's a reason why they place this data here for you to refer it, to refer the price, the number of pips, the range from which the market is moving towards to. So guys, I want just to see how market is going to react. For real, for real. I want to see how it's going to react again. I guess taking a lot of time, guys. I think I'll pause the video. Let the market do some consolidation, take time, then I'll continue it. as I was saying, guys, there's a reason why market have done this one here. There's a reason. There's a reason why market have reacted this way. You can see how they have reacted that inefficiency that is here. There's an efficiency that is here. This one, this is a BC, battle imbalance is a deficiency. The market have reacted on that consequent encroachment. The midpoint of that inefficiency, it have reversed. So that's why I've been saying that it's always good to consider, because I know some people would have gone short here, expecting the market to come down here. There are people who already got to market here, expecting that it's reversing, it's going down. Now just came up, took that that buy side short-term high that have been here. So I'm saying that this, you have to, in trading, you have three things that you have to understand. First of all, it's about the technical analysis. When you talk about technical analysis, you are talking about that is your entry point. Your entry point is determined with time, because market is a price-based chart, time-based chart. I mean, see price, time-based chart. It moves with time. There's a reason why market is consolidating at a certain time, and there's a reason why market is moving in a faster way at a given point. So it's a time-based chart, and you have to understand that there's a reason behind it. So when you understand technical analysis, it's about what's making the market to move this way. Why is the market behaving a certain way? Why is the market doing certain things in a certain way? You have to understand, what's the market just came here, consolidated this way, like from 4, like the start of the 4 to 5. Market consolidate, this is 1 hour consolidating here. And then just 5.5 get it immediately displaced down. And then it came up a little, taking the short-term low that have been formed here, immediately coming up, having a two black candles just after taking the short-term high here. That one is an order block, like an order block coming to take this short-term high that they had formed during 4 here, and then coming back. You have to understand what's the reason marking market do so. Not like it's going down, you get short from here. Without knowing that you have gone short, it's reversing again up. You have to know. That's a technical analysis. Next is risk management. When you talk about risk management, you're talking about placing a stop loss. That one being of them. It have some more subtopics, but one of them is about risk, about stop loss. What's making you to place a stop loss at a certain point? There's another block below the entry point. Yeah, that's a good for your order, for your placement of stop loss. And the other things about that's a topic about the risk management is about the money that you have in account. You look at the amount of money that you have in account. Now that one will determine you. Now it's around, now it's 10. That's why you can see the market reacting that way. And if I could have not taken my stop loss here, my third what about my second partial, if I would taken now. So I'm talking about risk management. The amount that you have in your account. You cannot tell me that you are going to risk 1,000. You have $1,000 in your account, and then you are risking $500. That's just like you want to blow your account within 2 trades. You have to have risk management. For instance, you have $1,000 in your account. Risk $100. That's 10% of your amount. You lose that one. Risk a half of the risk that you lost. That's 50%. That is 0.5. It was 1,000. You risk 100. You lost. it became 900. Next trade, risk $50. The half of the amount that you lost 100. You lose it. You risk $25. There's no that's how risk management works. So that even if you lose, you continue losing, even if you risk $25, and one day it emerges to that you are going, it market's going according to the way that you wanted it to go. You'll earn like $200. $200 will recover, like you lost 100 and you lost 50, and you, let's say that $25, you got a profit of $200. Now you add 50 plus 100, that's 150, and finally you got $200. That's a profit of $50. At the end of the weekend, at the end of the week, you are profitable with the $50. Other than losing $100, now you become more emotional with the market. You say that I want to get the market with more amount. You risk now $200. So imagine now you are going to lose 100 plus 200, and then next time you're going to risk $300. Now let's say 300, you have gone into the market with $300, you get $200. First of all, remember you lost $100, and then you lost now 200. That one tells you that you are going to have a zero income into a zero additional in the amount of the market. Now that's risk management when it comes to trading. How do you manage your risk? How do you manage your account? How, like for instance, me here, I've already secured my stop loss. No matter what happens in the market, I'm profitable. That one is accountable that I'm going to be profitable. That's risk management. Third of it is about trade plan. What plan do you have? Which type of model do you trade? Yeah? What time? How do you feel comfortable trading at a certain time? And where do you place your take profit level? What makes you to think that market can turn at that certain time to take that buy side liquidity and efficiency, or sell liquidity, or even going to a breaker? What's the appeal array behind it? Do you know the decision order flow, paradigm of the market? Those are the things you have to consider. That's your trade plan, the plan that you have. When you have certain things, the reasons that I've said, you'll become a profitable trader. First of all, technical analysis, you study, have knowledge. Second of all, you study, now you start to that market. You have risk management skill, the amount that you have in the market in your account, and how amount you are willing to risk and lose. Those are risk management. That's your stop loss. When I say you are willing to risk and lose, that's your stop loss level and trade plan. Those three things will make you to be a profitable trader. You don't have to be winning every trade. You can win 5 trades and lose one, and you have your losing trade at the end of the week, a losing close trade of the week. But you can win 1 trade and lose 4 or 5 and be a profitable. So it's about yourself, knowing which models for you the best. This one is a silver bullet setup, guys. This one's a silver bullet setup. You can add some 2-3 contracts there. You can add some 3 contracts there. Even I can take my stop loss here because I know markets should not come up there. This one is an order block. This one is an efficiency. Shift market structure, market coming to take this one here. This inefficiency that is here. Remember, this one is 10 silver bullet setup. You can get to the market again. Expecting market now to rally up. can add two slots from here. But that's enough for me because I already taken 5 of them out. No, there's no need of doing that. There's no need of doing that. Let's just listen. Even if it can't take my stop loss, I'm cool. I'm okay. I'm fine. It will be nice for me when it does so because it's when it's positive. If you know how to trade well, this I was using 3 minute chart. This one. Now this one is 5 minutes. Now to see market is going to react here. I think it should not go below the this one is another block. Yeah, it should not go below the 0.5 here. That's the main threshold for another block. It's just close below above it. I'm okay. Like that way now. Close there. And then you just come again, touch it, and then you go. To be okay for that. That one will be telling me that you are going up. But if it's close below it, I'll know that the market's going down. Remember, it's the last week of the month, so should be expecting anything to happen. But from the sense here, I can tell this market's going to take this better liquidity. Even if you take my stop loss, in the long run, you're going here. Take this one. That's my prediction. My stop loss just below the mid threshold of that order block. But the market that's just came until to touch that lower quadrant of of this other block. It's okay. They always say wicks are there to damage the market, to do damage, but the body tells you the narrative. So in the long run, I want just to see what the market. If it's close below it, I'll be aware that we are just going down because it have already broken the low of another block. When the low is broken down, that law doesn't apply that place. It means that your prediction is wrong. You try next time. Come on, take it. Yeah, just want to see. I've been my execution have already been taken out. My stop loss, I mean. I want to see the how market is going to react there. It's going to revise. It's not close above this at this place. That's an interest of that other block. If it's close above it, below it, that's not another block. You can see this was first partial, second, third. This 3 plus 4, 7 plus 5. That's 12. That's good for a day. So I want to see how market's going to react. Now that's not another block, guys. Market's going down. It's heading down. Market's heading down. Let's check British pound. British pound have already taken this one. The buy side that were here. But the euro dollar have failed to take the buy side liquidity. So it's a word that they used to say. It's called when two types of pair market that you use to compare. One delivers and another one doesn't deliver. I know I've forgotten the name. Convergence is something like convergence. I'll tell you in the next video. Just forget that name. Let me just check that name here in my books. I'm not seeing it. I don't know where it is. Always somewhere like here. Now this one is not another block. Close below the mean threshold, that's not another block, a valid order block. And it's okay to say that you got it wrong. Something like convergency. Just forgot it. I think I'll tell you in the next video because I can't get it at the moment. I'm not getting it. I'll tell you in the next video. We started trading during New York open kill zone. It was around 7. I'll tell you in the next video, guys. You can see how market's manipulative here. Let's take in a 50 minutes time frame. Short-term high taken, short-term just taken. After taking this short-term high, immediately it came to run towards short-term low. That's so dangerous. If you are just a new trader, you don't know whatever you are doing. So dangerous, that type of market. You can see how market are reacting here. It's reacting here. So always consider following few things that make you comfortable and make you to be a profitable trader. That's what matters a lot. As long as you are getting something, no matter which strategy you're using, no matter which management skills that you are using, risk management, I mean, whatever you are using, as long as you are profitable, I'm happy for you guys. Please consider subscribing, like, share, comment, do that thing, play with that chat below there, comment everything. So let us meet on the next video. Thank you, guys.